Hello, everyone. Welcome to the Baltic Horizon Fund webinar session. We are going to introduce the fund's audited financial results of 2016. I'm Kristin Pedak, the Communication Manager at Baltic Horizon. And today's host is Tarmo Karotam, Fund Manager of Baltic Horizon. Before we proceed, just a few notes on the webinar agenda. It consists of two parts. Firstly, presentation to introduce the Baltic Horizon Fund results of 2016 annual report and an overview of the portfolio. Also regarding today's NASDAQ announcement, Baltic Horizon Fund plan of next public offering of new units. After the presentation, we will be answering the questions. Please feel free to ask questions during the webinar using the question box. Welcome and thank you for joining. Tarmo, I would like to invite you to please start.
Thank you, Kristin. Warm welcome also from my side. Today's webinar is also, like last time, is being held from Vilnius, Lithuania. So let's get on with the agenda. I think overall what I can conclude is that the audit period of last year of the fund went very well. The audit included the audit of the fund itself and the SPVs that the fund has control over, which hold each and every one of the properties separately. Everything went well. There was, I could say, virtually no changes to the financial statements. So the audit was finalized some weeks ago. So there's not a lot to say here what changed, but just a quick review of then Q4 also results that were already discussed in the last webinar. We had an increase in rental income due to new acquisitions, namely G4S building in July and Ukmalas Biroi office building in Riga. We also had a closing of Pirita shopping center at the middle of December, but that affected rental income relatively in a small way. To probably note one extraordinary cost item line here is expenses related to the IPO, both IPOs actually. In Tallinn and in Stockholm. Overall, I think the process in Estonia was listing process was quite standard, whereas in Stockholm to establish the link with Euroclear through Nordea Finland took a little bit more time. It was never been done before. But I'm happy to say that that also successfully was concluded just before Christmas. All in all, these are one-off cost items. We don't plan to do any IPOs in the future. That's done and dealt with. Overall, the decision to list in both exchanges was a right one, because both exchanges show trading. Different investors from different regions, for example, from the Baltics and Euro investors, they invest and trade in Tallinn, whereas mostly Swedish and Nordic investors trade in Stockholm and in SEK. So looking forward to 2017, yeah, any expenses related to IPOs will not be there in the future. I guess a comment on the valuation gains on investment properties. I think that was relatively as expected, approximately 5% increase in or addition to return on equity from valuations that came mostly from indexation of rents in some properties, and in some cases a slight, very minimal reduction of discount rates, but that information in detail is available in the annual report. Financial expenses, namely interest costs, increased in line with new acquisitions. And again, overall, there were no changes, virtually no changes, very minuscule adjustments to the annual report, annual results during the audit period. Cost of debt is, as the end of 2016, around approximately 1.8%, and weighted average maturity of debt as of end of 2016, 2.8 years fixed. The team behind let's say the financial management team is working continuously hard to get the best possible financing terms for each and every one of our properties, and let's say a good mix of loans, their maturities and costs, as well as covenants, in order to have let's say solid and sustainable performance of the properties and of the fund for the investors. And this specifically means ability to pay out cash distributions on a quarterly basis from the operations after all costs, including cost of debt, has been taken out. I don't have much to say. In addition to that, perhaps let's move on with the second point of the agenda. I thought this time I would focus more on the portfolio itself and some of the properties there. So to really discuss, you know, how each and every one of the properties is doing. The total portfolio at the end of the year was it consisted of 8 properties, and this is as well a slide from the previous presentation. However, on the 22nd of March, we were able to close and acquire fully the Duetto one office building in Vilnius. The anchor tenant there is Lindorf, and we continue to work together with YIT to maximize income and potentially also collaborate on developing the sister building Duetto 2 in the future. The seller YIT developer gave us a 2-year NOI guarantee. So why NOI guarantees are important to us, especially with new buildings, is that that any, let's say, potential disruptions or maybe small changes of tenants could be then addressed in this way, so that for us, let's say the income and of course the dividend or the income distribution stream is as expected. The same guarantee goes also to Pirita shopping center in Tallinn, which was acquired in December as well. We agreed on a 2-year guarantee on the starting NOI with the seller, and we're constantly as well, let's say, reviewing what is happening in the property to make sure that If there are any changes in the tenants, then we do it together, and we can after 2 years have a sustainable tenant mix and NOI. This idea actually was first tested with our Domus Pro acquisition back in 2013, and as well together with the developer. Having a brand new property develop, especially retail property, it takes a few years for them to find their own visitor base and let's say stabilized tenant mix. So we have been using the seller's guarantee actually in 3 cases now recently. Upmalas Biroi, there is also a partial NOI guarantee for 2 years in place. The total value of the properties with Duetto acquired is 156 million, and we have made 2 acquisitions after the second public offering in November. We have some equity left from that capital raising. That equity is being invested currently to the expansion of Domus Pro, to completion of the office building part, which is a stage 3. And but I'll get back to that later during the presentation. Overall, Baltic Horizon strategy is to focus on retail and office properties, and our target is to have a good balance of retail and office properties. The 8.3% pie there is considered as other or leisure. Is classified as other. 8.3% represents actually the Coca-Cola Plaza Cinema building in Tallinn, which could be, in essence, considered as retail property as well. But overall, we're happy that we have a balanced mix between the segments, pretty much 50-50. In regards to geographical allocation, we have majority of the assets currently in Lithuania and Vilnius. That's probably the reason why this webinar is also held from Vilnius. There's a lot of activity in Vilnius. We have the smallest allocation currently in Riga. We, as one can assume, are looking to stabilize that pie chart and see if there are some interesting opportunities in Riga. At the same time, we are not, let's say, forbidden or restricted to look for any opportunities in any of the cities in case we find something attractive for our portfolio, and we would be willing to pursue that to grow the fund further. Below here, I've brought in a shared service center headcount chart in Vilnius, and just to demonstrate how Vilnius has been extremely successful compared to, I think, Riga and Tallinn, to attract those shared service centers to the city, and how in 5 years, the people employed in this sector has almost, I think, quadrupled. So that shows also a little bit where we are focusing now on with our fund strategies is strong brand new office buildings built basically to suit for these shared service centers that normally rent these properties at a minimum of 5-year basis, sometimes even 7 and 10 years, non-breakable. And this is a type of long-term sustainable cash flow that the fund is looking for. and we're likely to continue this strategy at this point. Now we see this trend continuing in the Baltics. A few words about our tenants. We are happy to have one of the the mix of some of the strongest tenants here in the Baltics, and some of them are companies that have been here for 10, 15, maybe even 20 years, whereas some of them are the ones that have now come here during this shared service trend. G4S as our largest tenant, they occupy a building in Tallinn. Forum Cinemas, occupier of Coca-Cola Plaza. Then SEB Global Services is our anchor tenant in Riga, and they're expanding in our Latvian property, at least have plans. Rimi, we have now in 2 locations, in Vilnius, Toomas Pro and Pirita. In Tallinn, Swedbank still one of the anchor tenants in Lincona, and Cabot also a strong back office tenant in Riga, in Upmalas Biroi. Overall, we look at the maturities of the existing lease agreements and try to balance that out throughout the years ahead, so that not all lease agreements end in 1 year. We know that 2022 is a year where currently approximately 20%, a little bit more than that, of these agreements terminate, and it could be said that we're not, since we're in constant dialogue with our tenants, especially long-term ones, then it may be so that we already start the dialogue of any prolongation or any changes in the lease agreement years ahead. So that's a dynamic management approach that we have towards the portfolio and its tenants. The same goes for loan agreements. So constantly reviewing, negotiating, and trying to get the best tenant mix. Okay, a few words about each property, just so that to get more acquainted with these properties. Lincona was our first acquisition, and the history of Lincona property is that in 2013, if I remember correctly, the Swedbank decided to decrease their premises in the building, and we were able to re-tenant the property to new tenants in 2014. The building has been, very, let's say, has had over time very low vacancy. In 2014, there was about I think almost 20% vacancy for 12 months, but we let's say we used that time to renegotiate with some of the current tenants and new tenants. So it took us close to 12 months to fill the property with long-term leases. So and as of now, the vacancy remains low. There was actually one divestment in March 2015. There was an adjacent baby center, small building that was sold to a private investor group in Estonia for approximately 1 million euros. But that was a standalone property. Happy to have this property in our books. I think the retail also on the ground floor is quite historic there to house some of the interior design and home, let's say, home improvement tenants, and the area is well known for that. Pärnu Road is one of the arterial roads in Tallinn, so happy to have this building in our portfolio. And again, with a large parking house there as well, if you can see, that's proven to be a very strong asset when talking to the tenants and attracting them to the building. Plenty, let's say, abundant parking is extremely important for tenants. Sky Supermarket, small supermarket in a neighborhood in Riga. Sky is a local chain. They have 4 properties in Riga. It has found its position in the hearts of the Riga citizens, so it's quite a unique positioning of this, let's say, a little bit upscale food market in the minds of Riga citizens, and is one of the, let's say, most resilient properties that we've had, with quite a strong rental growth seen since 2013, especially with indexation, as a result of indexation of rents and some renewal of tenant mix. There's some potential to actually build additional buildings on the land plot, but we're not actively pursuing these rights at the moment. But alternative use is to build a few tall residential buildings actually on the parking lot, but currently it's not. The best use is currently the supermarket. Coca-Cola Plaza. Coca-Cola Plaza is, I think, one of the, what can I say? It's one of the most interesting assets in the fund. CBD asset acquired in 2013, currently rented out to Forum Cinemas on a long-term basis, and I think it's public information that we have developed a concept to add value to this area of the building, and especially in line with Narva Road, which is the large road intersecting with the location to become more pedestrian friendly. Then our view is that corner of the city, from many perspectives, has lost its attractiveness and is so-called obsolete. So together with the city, with their plans, we are thinking how to add value there at that location. The planning phase is in this case sometimes longer than expected, but we really want to develop something. We want to develop a concept that is really a win-win for everybody in this area. All the neighbors, the pedestrians, Rotterdam Quarter, inhabitants, and all the also businesses around it. I can just say that this is fully in motion, and we spent quite a lot of time in finding the right concept there. One idea is to also connect the building together with to the Postimaja shopping center. We'll see how that pans out over the next, let's say, 12 to 18 months, if that could be a realistic scenario. But in regards to Coca-Cola Plaza, the idea is to increase the attractiveness also visually of the property. Currently, it's basically a few concrete blocks. The building is in excellent shape, built in 2001, but I think considering what's been happening there in the recent years, how the area has developed, we want to refreshen also the property there together with the city and neighbors. Then moving onwards to Domus Pro, this one was acquired as a forward funding acquisition and forward commitment acquisition, where together with the developer we helped to finance the start of this property back in 2013. First, the stage 1, which is the large part, you can see in this picture, and with Rimi being the anchor. I think the property now, almost 3 years after the initial opening, has found its loyal customer base, and if you can see, the dwellings are around it. There are many office buildings around it, so generally I think the property has been very stable. And in stage 2, when we continue the expansion in 2016 for 2 tenants for Hansa Tiles, and then the gym, which is now fully completed as of last year. That's working also very well, complementing the tenant mix of stage 1. And the gym, if anybody is around, welcome you to visit Fitness Club in Vilnius. I would say it's one of the newest and largest fitness clubs with a wide variety of services, including 2 large exercising rooms, swimming pool, and cafe, and everything. So a great concept on 2,200 square meters, works very well, has received a lot of publicity in Vilnius, as also some say one of the most luxurious fitness clubs in Vilnius. And again, it has found its own tenant mix, visitor mix, and this is doing very well. And on to the third stage, if you see in that picture, there is some construction ground. It's a bit an old picture, but the third stage should be the final extension of the buildings, and 6 floors office building with 2 floors underground for parking. We're pursuing a BREEAM certificate. Construction is in progress. I think right now 2 floors above ground are already constructed, including the parking. So pre-lease level today is 52%, and we look forward to finalizing the construction by end of this year, and filling that property with new tenants. Despite that, the office market in Vilnius is quite competitive and very active. New buildings are being built. The office take-up is also quite strong. We do see that we have some competitive advantages. We are, I think, very attractively priced, but more so, the location of this office building is next to the shopping center, where the office workers will have a very good opportunity to do their everyday shopping and visit the gym and everything else. So I think we have a good offering there. I hope to fill in that building by end of this year, at the same time when the building is completed. Europa Shopping Center, one of the actually the biggest asset in our portfolio, built in 2004. We acquired that in 2015 after it had gone through the let's say renewal of its concept and its tenants after the financial crisis. And more than 70 tenants. This is a very attractive and active center. We have also a gym here. It's called a Lemon Gym, and it's It's also been working very well on the third floor. We have quite a number of let's say destination tenants on the third floor, including Suit Supply, and where our focus has been now with this property overall has been this year and also last is to improve the restaurant mix in the center, and we have finished one half, and the second half is now still in progress, where the renewal of one of the restaurants, large scale project is going to happen over the next couple of months. Michael Kors is one of the key attraction points in this center, and overall we look very much forward to the development in the neighborhoods and of these additional new office buildings and hotels being completed. So we are very much focusing now on also right marketing strategy, how to approach these potential visitors and how to increase the footfall considerably over the next couple of years. Yeah, so this is one slide that depicts the downtown, the CBD area of Vilnius today. Some of these buildings have already been built, and some of these are still coming. G4S headquarters office building in Tallinn enjoys again a stable tenant. It's public information as well that Pipedrive has been looking to expand as a tenant, and they're a subtenant of G4S. They currently occupy two floors of the building, and probably not next year, but maybe the year after, in a couple of years, they may consider a new destination. But we're already addressing this as well ahead of time to see, together with G4S, how to manage this properly for them as a subtenant for G4S and also for us as a long-term property owner. This land plot does hold potential for additional office building. Currently, we are preparing the site for this expansion. So potentially, again, a place where to add value over the coming couple of years with a new building. So we have to time it right. I think right now the influx of new office buildings in Tallinn has been quite strong. So competition is very has strengthened a lot. But we keep this in mind as well in terms of timing this new expansion. Upmalas Biroi we briefly talked about, and one of the most attractive office buildings that we have, very well constructed. Happy to see that tenants really enjoy being in this building. So yeah, again, there's always something happening, some small tenant movements, exchanges, so forth, but nothing to really, let's say, nothing really noteworthy on our overall picture, just business as usual. And the key point about this property is a 2,000 square meter floor plate. So from one end to the other, you can walk on one floor, and again, large tenants such as Cabot and SEB very much prefer such type of buildings. Then Pirita Shopping Center, latest acquisition, one of the latest acquisitions in Tallinn. The location of Pirita is let's say historic one. It's right in the heart of the Pirita, historic Pirita beach area, Pirita residential district, and this center definitely has some emotional value as well for the people living and working around it. We acquired it in December, knowing that we'll probably have to, since it's a brand new property, finding again its place in the neighborhood and in the hearts and minds of the people visiting and living around it. So we're putting quite a lot of efforts into this together with the seller and our property management team to really make this a shining star of that area. And Rimi and MyFitness are the anchors. Happy to say that they're both quite satisfied with the opening, and this is definitely a seasonal center. So marketing campaign is now ongoing, I think, from next week. Ahead of the summer season, where we see 20,000-30,000 people potentially every day visiting the Pirita beach area, needing to buy some everyday goods and get some food along the way. So our focus is definitely on making this center even a better one that it is today. And that may also mean strengthening the tenant mix and replacing maybe some tenants, smaller tenants, but just in order to make sure that the offering for the neighboring for the neighborhood and the people living in the neighborhood is the right one. So we're even doing questionnaires and all of that. So just to make sure there's a tenant mix that is long-term and sustainable. And latest acquisition then that was announced a month ago, or actually already a couple of months ago, but it was closed 22nd of March when we started to get rent from this property. So we had to wait maybe a month or two patiently for this property to start earning rent for the fund and for the investors. But I think it's definitely worth the wait, and the area is next in the main intersection of the newly completed Western Ring Road is definitely with long-term attractiveness, especially for back office tenants such as Lindorff and similar. So happy to have this property in our portfolio. Before I go to this last slide, I would like to say that that having acquired some of these properties and looking to grow the fund further, we are also considering potential disposals. And if we see that the property is not suitable anymore for our tenant mix or for our portfolio mix, especially, then we may consider selling them. So we want to keep a dynamic portfolio that first of all is new, consisting of new buildings, and that can let's say follow the trends that are happening in retail and office segments in the Baltic capitals today and in the near future. Okay, I am going to speak a little bit about the new public offering, then I see that there are some questions. Let me first address this last slide. There was an announcement today that we are planning, we're considering a new public offering for maybe one or two of the buildings that we have worked to put on our pipeline, that we see that would strengthen the portfolio, the tenant mix, and the risk diversification. So this was a really announcement that the work has started, and preparatory work. As I said, it's not as major scale as it was last year because there's no listing, but prospectus based on the old prospectus has to be made for that, and that's currently in process. The final structure and details of the offering will be announced a bit later. So I think more news will be coming in that way around. I will take then the questions. First question I see from Andrus Juasar, and it asks about public offering costs, and that on page 54 there was another public offering cost of 1.23 million. And what does that cost for? This is that's a good question. I think it's important to note that in the P&L, what is shown there is the charge which is related to setting up the public offering and the listing. The legal fees. Major part of that has been the legal preparatory work for the listing in Tallinn and in Stockholm. The public offering cost of 1.23 shown on page 54 is actually the cost of the success fee of our financial partners of the fund for being able to market the fund to their investor base and to institutional and retail investors, and successfully raising additional capital for the fund and for the new investments. So that's been that's been the cost, and that has been reflected in the cash flows. It's just in financial statements. It's in two different places. The question is that what will be different with May 2017 public offering? I would say that these fees are likely to be especially the public offering costs and on a profit and loss statement to be considerably lower. There is still some success fee involved for engaging our financial partners, which we have chosen to be the same LHV Swedbank and Catella Bank, and those fees are to be still to be finalized. But overall, they will be significant. These fees will be significantly lower than last year. Overall, in total, I have then another question. And this is about deferred taxes. On page 45, there is a number. 45, there is a number. Let me just find it here. Of 3.2 billion euros as deferred taxes, and deferred tax is one key difference between the NAV that is published on the Nasdaq webpage, and then the EPRA NAV, which is a long-term NAV. What this deferred tax is actually the tax which has accumulated over the years when there has been some appreciation of the property, and this is a tax which can only realize if the property is sold and the company is liquidated. Now, having said that, for example, if you do a share deal, then the effect of that deferred tax can actually be positive, because in share deals the standard is to the split, the deferred tax between the buyer and the seller, because that tax, if it's traded, the company is traded from hand to hand, it may never realize. So it's up for negotiations. I wouldn't say it's a hidden asset, but we have subtracted that liability, to get the NAV, which is displayed on a monthly basis on the Nasdaq webpage. But in case of a sale of a property, yeah, there could be all of this could realize, but also there is some negotiation potential with the potential buyer that not all of this tax will realize. Okay, next question. Next question is a very good one. The question is that currently the fund is trading at a slight discount. It's approximately 2-3% depending on a day to the NAV. And the question is, what do I think is the reason for that? Honestly, it could be a number of things, but I think what is important is that the market price has followed since listing quite closely the NAV, and we've been listed less than a year. We made 2 distributions, so I think and we very much hope and work for that the discount will disappear, especially if we continue with our regular dividend payments, since they are attractive on a cash basis, and I think many investors also enjoy the positive tax application. But it's difficult to say. I mean, investors trade as they see, and I'm trying to explain as much as possible what this fund is all about, and what are the properties all about, and what are the risks, so forth. So yeah, we don't control this, but we can only try to be informative about what we are doing, and therefore support the market price. Another question, weighted average maturity of debt outstanding is 2.8 years. And the question is, why don't we lock these rates for much longer? What I can say is that, and again, what I can say right now is that we're working constantly on prolonging these debts, and hope to be very successful in the near future, announcing different numbers. That's all I can comment. The question about NOI guarantees and of existing properties, and did if there was any shortcomings, did we receive any cash payments? we have received some cash payments and are still receiving some. The other thing is that in some cases we have also negotiated a deposit. So it's been put in place for 2 years. So in case there is any shortcoming, we'll take from that deposit. Overall, those numbers are not material. So it's just to have more. The idea of an OI guarantee is to make sure that the seller works with the property also after it's disposed, and they don't leave the property and the new buyer by themselves. So it's just a push for good cooperation. The question is, the next one is, do I see a risk that the current 8% yield, I presume that's the payout, the distribution, cash distribution yield target of 8%, and is that at risk, considering what's been happening in the area, especially medium to long term? I can only comment here again that this yield really, the payout yield really depends on two things. First thing is the quality of our tenants, the occupancy of our portfolio. At the end of last year, the occupancy of the portfolio was 97.2%, and we work very hard to keep 97.1. We work very hard to keep good relations with our tenants so that they consider, if not one of our properties for very long term, then at least the property owner, the landlord, to be their long-term property partner and cooperation partner. So we do our best to keep our properties fulfilled, and if we do that correctly, then the second part of the equation is the cost of debt. And I addressed that question earlier, where 2.8 years is currently the average maturity. We hope to prolong that, and then let's say in short to medium term, I'm quite confident that our targets should be achieved, and we're again working very hard on that, and hopefully with the fund growing and let's say more cash coming from a wide variety of tenants. Currently our largest tenant is 10%. Ideally our largest tenant in the portfolio should be 5% or even less. So so to have more diversity from a cash flow cash flow wise, so that small changes in tenants, so only that the big macro changes would probably impact the fund one way or the other. But again, we're working very hard to keep the contracts strong with both of our tenants and financing partners, so that they are also legally holding, maybe also during some difficult years. And that's what I can really say about this. This was the last question, I see. And thank you for all the questions. I don't see any more questions at this point. I welcome you to subscribe for our news if any of you hasn't done it yet, and look forward to a new session and a new dialogue in regards to the future of the fund. So I guess at this point I would like to thank everyone on behalf of Baltic Horizon Fund Management team, and wish you a pleasant day and success in investing. Thank you very much.